Welcome back to Trading Hour on CNBC-TV18. As promised, we have Varun Goel, the head equity at Nippon India AIF, who joins in now to discuss the market fundamentals and the road ahead for the markets. Varun, pleasure speaking with you. Thanks for joining in. It has been a very smooth ride so far. And as we head into the end of the year, how are you feeling about the markets now? You think we could build on to our gains now that most of the headwinds seem to be receding? And for an investor, what is the recommendation?
Good morning, Sonia. Thanks for having me on the show. I think broadly from a markets point of view, we are looking at somewhere between 800 to 850 rupees earnings for Nifty companies for this year, and for next year we are looking at somewhere between 900 to 950. That's on Nifty, and so on that basis we are trading almost 19-20 times 1 year forward earnings. Of course, market will start looking at the year ahead. I think this was a tough year with a lot of issues in terms of monetary tightening, commodity price increases, and all. Thankfully, crude oil has cooled off to $85 a barrel, which is always good news for India. So we think incrementally things are getting positive as far as Indian economy and markets are concerned. Our sense is earnings growth could be 10 to 15% on a CAGR basis, and this is a good time to do bottom-up stock picking. Although valuations are a little higher than the 10-year average. But I think on a stocks specific basis, there are several sectors like telecom, like real estate, banking and financial services, which should see strong earnings traction. So it should ideally be a stock pickers market from here onwards.
So banking, telecom and real estate. I remember last time, Varun, you'd also said that IT was one of your top sectoral bets because you believed the margin concerns have receded and the valuations are now attractive after the recent fall. Have you been buying IT stocks in the last, say, 1 month?
Yeah, good morning, Rima. So definitely, I think earnings in IT space have largely held on. Our sense is this year, Tier 1 IT companies should see between 10 to 13% top line growth. The next year, FY24, is something which is more difficult to call, considering the fact that no one is really sure how deep and how long the US recession is going to be. But our sense is a lot of that is already in the price. Mid and small cap companies in the IT space have corrected 30, 40, 50%. The large cap companies have corrected 20, 25%. So if one were to take a 3-year view, I think the digital transformation companies, transformation of the client companies should continue, and Indian IT companies are very strongly poised to capture that growth. So as such, I know we are definitely buyers in the large cap and the mid-tier IT names, and we believe that they can create significant value in the next few years.
Okay. We just had a chat a while back, about an hour back, with the management of Rustomjee, the new listing, Keystone Realtors. And he made a very interesting point. He said that now what's happening is that the market has become so huge, the real estate market, and there's a massive shift from unorganized to organized, especially after COVID. Do you think that, I agree that a lot of it perhaps is in the price as well, but do you think from a structural standpoint there's more to go for these large real estate players?
Sonia, I think affordability has seen significant improvement. In 2013, your EMI to take-home salary ratio had gone up to almost 50%, which means you were paying half of your salary in EMIs. Today, despite the home loan interest rate going up, that ratio is still 35%, which is, I think, very, very affordable. If you look at the pan-India inventory levels for real estate companies, they are less than 2 years. Now, that is always good news as far as the pricing action is concerned. We believe in the next few years, we will see more and more market share gains for top pan-India real estate companies. We will see more pricing action. So while volume growth are anyway strong, we should see price action also happening, which should lead to a good 15-20% compounding for a lot of these large cap and mid cap organized players. And as such, we remain quite positive on the space.
Varun, specifically about Mumbai real estate, it's no longer affordable, right? It was during the peak of COVID 2 years back, but rents, purchase prices have shot up significantly, and now it's much higher than what it was pre-COVID levels. So what about Mumbai real estate? Because rentals, as I said, have gone up. At some point, the higher interest rates are going to hurt. And even the availability, the supply in the market is dwindling. So are you as confident about Mumbai real estate, clocking in good gains from here?
So Rima, I think we've seen a period of 8-9 years when there was no pricing action. So between 2013 and 2021-22, there's almost flattish kind of pricing. In the meanwhile, salaries have increased significantly. So while I agree with you, we saw the bottom of real estate prices in the first quarter of COVID, but since then prices have been going up. At the same time, incomes have also been going up, and cumulative income increase of 7-8 years 9 years is definitely going to help. As I said, affordability is still good. If we look at the EMI and take-home salary ratio, that's still healthy at 35%. If that goes up above 40, that would be something which we'll be worried about. And I think looking at where crude oil price and inflation is, we might be close to the end of this tightening cycle, maybe another 25 to 50 basis points, but that should be it. Pre-COVID, pre-demon, we saw 9% home loan rates. Now we are getting back closer to that, and we believe that should be the peak home loan rates for this cycle. So as such, we are not too worried. Yes, if the global situation deteriorates in a meaningful manner, which means there is significant dent on IT sector and broadly broad Indian growth, then I guess we might revisit that hypothesis. But as of now, our view remains the same, which is a positive view on the residential real estate space.
Okay. I do want your thoughts on what's happening with some of these names like, Star Health, the PB Fintech. There is news flow that the specific caps on commissions to agents and intermediaries has been removed. So this reduces the regulatory risk on the commission rates for many of these companies. And we've seen a large move over there. Does it make sense from a long-term standpoint to buy into these names?
Well, I think the recent policy recommendations that have been coming from the regulator are quite positive. I think they will definitely help most players in the space, especially the general insurance and the health insurance companies. So overall, we would be positive on the space. I think the biggest issue with general insurance companies in the last 2 years was, of course, there was a lot of claims due to COVID, and second, the auto sector had slowed down, which remains a very large space for most general insurance companies. Now, as the auto sector picks up, we would expect the growth should come back, and the combined ratios which were running at elevated levels should also cool off. So we will continue to monitor the monthly numbers and see how things go from this point onwards.
What's the thesis for the bullish call on telecom? Because stocks like Bharti Airtel are already at 52-week highs, or nearly there.
Yeah, so I think the biggest story in telecom is how the ARPUs are increasing, the average revenue per subscriber. Now, just 1 year back, the industry ARPUs were at around 140, 145 revenue per subscriber. Today, we are at already 180 plus kind of levels. And of course, some of the companies have announced that they want to take the ARPUs to as high as 300 rupees. Our sense is 240, 250 is something which is very likely in the next 1.5 to 2 years. So as such, as the ARPUs increase, there will be a significant increase in profitability. We haven't seen very, intense competitive intensity as far as the 5G auctions are concerned. So the capex there should stay under control. So overall, for the next 2 years, one of the fastest and the largest growth in Nifty companies' profits, I guess, will come from the telecom space, and we continue to be positive on that.
ARPUs at 240 in the next 2.5 years versus current levels of 180.
Sorry, what was that?
No, you said your expectation is that ARPUs will rise to 240 rupees in the next 2.5 years? Okay.
Yes, maybe sooner than that. Yes.
Maybe sooner than that. All right. Thank you very much, Varun, for joining in. That's Nippon India AIF, bullish in banking. He's bullish in real estate. He's bullish in IT and telecom.